Welcome, and thank you for tuning in. You're listening to the Beyond 50 radio program. I'm Daniel Davis. On the program today, we're going to be talking about an industry that has some very astounding numbers when it comes to thinking about things such as the fact that people out there are discovering that they have life insurance policies which seem to be more than $57 billion of face value, which are lapsed by seniors over the age of 65. It's also estimated that nationwide at least $10 billion in life insurance benefits go unpaid annually. And it's really interesting to know that this includes things such as universal and variable life policies, which too few understand that they may be able to cash out with a life settlement, it's called, or a sale of an existing life insurance policy to a third party. So nearly 70% of the policies that were sold by someone no longer in the business are not compensated very much after the initial sale, leaving little incentive to service the existing policies. Our guest joining us on the program today is talking about the case against life insurance. I'd like to welcome to the Beyond 50 radio program today someone who is a national speaker, author, and entrepreneur who combines his legal and business experience to help Americans fulfill their life mission, both with philanthropy and financially. I'd like to welcome to the Beyond 50 radio program today our guest and author of 2 books, Mr. David Kotler. David, thank you for being on the program today.
No, my pleasure, Daniel. Thank you so much. That was a great presentation that you made of a lot of the facts, which, as you say, are like totally astounding when you think about the numbers that are involved.
Well, it sure is, and we always talk about the greed that goes on out there, and I always find it funny how it veils itself in light of, but we're here to serve you. Now, let's go ahead and take a look at this. Now, you've been in this industry, as far as financial and so forth. Tell us how you got all started, what your expertise is in here for our audience today.
Well, originally I trained and was educated as an attorney. While I was going to law school at night, I worked in a family business, and fortunately, while I was going to school and over a 20-some-year period, that business grew very significantly, and we, at that point, were distributing some of your favorite ice cream products, hopefully, like Haagen-Dazs and Ben & Jerry's and Good Humor and Dove Bars and whatnot. And I lost that business in the mid-'90s, and I had to start over, and I had, as I said, a law degree and a business background, and an interest in trying to increase philanthropy, which I had gotten involved with when my business was successful. And my CPA said, why don't you look at financial services? And I said, well, I know I don't want to do anything with investments, but I'd be very interested. I think life insurance is a fabulous product, and maybe combined with charitable planning, that could be something that could be it would match up what I really wanted to be involved with. And over the years, from the very beginning, I was looking for what's the Haagen-Dazs of financial services? Because Haagen-Dazs for us, when I was a food distributor, was something that people would talk about. They enjoyed it. They would tell their friends about it. And it took me about 16 years to figure it out. But at that point, I realized that the Haagen-Dazs of financial services for life insurance was providing cash to policy owners in cash savings that they had no idea they were entitled to or that they could obtain. And so it became a very fun thing to try to make people aware of what the value in their policies are, because for many, many years there was very little effort being made in that direction. And as you can imagine, it is to the insurance carrier's benefit when policies lapse. If somebody gave you the analogy like with health, when you sign up for the gym, I think some huge number of people, 80-90% of people that have gym memberships don't use them on a regular basis. So, like with life insurance policies, when they lapse, those have no value for the people that spend a lot of money for these things. So I want to back up for 1 second and just declare that I am a believer in life insurance. I own life insurance. I think it's a great product. I think the case against it is that there's a basic lack of awareness and knowledge and education as to how to keep your policy alive if you want to, and if you don't want to, that you have that opportunity to get cash for it at probably 5 or 6 or 8 times as much money as you would get if you just surrender the policy back to the carrier.
Now, let's go ahead and talk about life insurance, for instance. Let's separate things such as myths versus facts, because we've actually covered, for instance, we've had on the program a guest who was talking about how you actually buy and use life insurance, in fact, as a retirement program. So you literally, in fact, are buying this so as you use this appropriately, our guest was saying, is that finally, when it reaches maturity, then you begin to borrow out of the policy, which was beautiful about that is because you're borrowing, you've got tax-free money. And it was pretty amazing, the different things that these things were set up for and how powerful these things and how often they were owned. Let's say in the early part of the century, for instance, was quite a few people actually own these things. But this day and age, when it comes to life insurance, people actually cringe, or they don't really find it to be a necessity, or they think the only way that you use this is if they die. But in fact, let's go ahead and talk about how we can separate the myth from the fact when it comes to life insurance.
Well, that's a great lead up, because there are opportunities if you take a life insurance policy and you, what I would say, called overfund it. So in other words, you're putting in much, much more premium than you would need to keep the policy in force until your expected maturity date or death date. But the horror story that I've seen so many times is that people are told this, and I come back to the same problem where if you're not constantly, but if you're not getting a performance analysis of your policy at least every 2 years. I don't say you have to do it every year, but at least every 2 years, you can't be sure that you're still tracking for what you need to be tracking for that policy to be in force at the date of death, at the maturity date. And if someone has a loan and the policy lapses because there's not enough cash in the policy. So in other words, client A said, oh, gee, I could borrow $100,000 out of this policy. And they're not paying attention to what's going on with the policy, because you could either take a loan or a distribution that's going to affect the performance of that policy. And just in simple terms, if that policy should fail, should lapse for not having enough cash inside the policy and the loan is in force, the IRS is going to get a letter from the insurance carrier, and the owner of that policy is going to get a very unpleasant surprise, because he's going to be getting an ordinary income tax bill on the amount of that debt that was, in the eyes of the government, forgiven by the insurance carrier. Which is crazy, right? Because, gee, it was my money. It's my policy. You say I can't borrow my own money back out of it? Well, no, not and let that policy lapse. So that's something your listeners should be very aware of. If you've got people out there that have loans against their policy, they need to be really, really careful that those policies never lapse.
Now, let's go ahead and talk about a couple of other myths and facts about life insurance.
Sure. Well, I think that here's a myth, probably, is that there's not that you once you buy your policy and you pay your premium, that you don't have to worry about the performance of it. That's a huge myth. I've had CPAs tell me, well, I thought everything was sort of guaranteed, or everything was sort of static, and there are just so many types of policies with so many different moving pieces. And just like you don't want to be underpaying on a policy and having the policy perhaps lapse, you also don't want to be overpaying on it. right? You don't want to be paying more than you need to. And I think the antidote towards this is getting someone who is expert in this area and helping you review the performance of that policy, again, every couple of years. And if you'd like, I could share a couple tips as to what should be involved in that evaluation.
Absolutely.
Okay. So there's something called a current illustration, or it's also in the industry called an in-force ledger. And this is very different from the snapshot, the 1 or 2 or 3 page snapshot that the carriers will send a policy owner once a year on the anniversary date, showing them some projections of their policy. And that is very insufficient data to really make an analysis or evaluation of that policy. What needs to happen is there has to be several different proposed illustrations run with the policy that you own. So the first one would you say to the insurance carrier, give me an illustration that shows me what happens with this policy if I continue to pay the same premium I've been paying on an ongoing basis. Show me what happens with that. And then for comparative purposes, you would ask for an illustration asking for what we call a solve equation. In other words, ask the carrier to tell me how much premium should I be putting in if I want this policy to last till my age 90 or 95 or 100. People are living longer today, so it's always probably better to be a little more cautious and conservative in that regard, Daniel. And I would say get a illustration showing at least age 95 or 100. And then you have the range as to probably what you should be paying if you want this policy to last.
Wow. It's pretty incredible to think about how people are buying life insurance. So what kinds of things should they be looking at and questions should they be asking, in other words, to go about this correctly?
Well, I think at the very onset is I think that the buyer has to be very clear what his purpose is in buying it. Is he buying it for a retirement vehicle? Is he buying it so that he can protect his spouse and his family should something happen to him or her? Is he buying it for a business purpose? Is it a permanent need? Is it a temporary need? And if it's a temporary need, to try to because a lot of people maybe cannot afford permanent insurance, but they really need protection when they're young for their families. And you can get 30, 40-year term insurance, which is certainly a much better bet than buying a shorter term, even though the shorter term is cheaper, because those rates, if it's the right product, will stay the same for the period of the time of the term. So it begins with being very clear as to what purpose you're buying it for and what your budget is. And I think, as with anything else, trying to select from amongst the A-rated or the best insurance carriers that are out there in terms of performance. These are all tips that I think would be helpful if you're purchasing insurance.
Gotcha. Now, let's talk about taking how people can break the cycle of what they call oblivious beneficiaries.
Are you saying that they've written the wrong beneficiaries in, or that they weren't aware that there's a death claim that they should be getting paid on?
Right.
Yeah. So there's a number of different resources that can be utilized for that, and there are some state organizations and whatnot. They have to Google, in their local area, but there are a lot of sort of help desks in terms of trying to help people or make them aware, that perhaps there's benefits that are out there.
Now let's go ahead and talk about your book that you have written for people to learn more about the insurance industry and what they learn from it.
Well, it's called The Best Kept Money Secret in Your Insurance Policy. And it's something that every policy owner, every trustee, every advisor should know. And I think there's probably a lot more than one secret, but if you were to distill it down to one secret, or two secrets, is number one, the secret of how to keep it in force, which, I've just shared with you recently, that it requires, getting these illustrations run every couple of years. But the other big secret is that there's a lot of potential value in the policy if people don't need it. So I think your show caters to baby boomers, right?
Yes, correct.
Okay. So think about, what's happened with the estate tax situation over the last 20 years. I've been in this business like 25 years. When I started, the allowable amount of money that could be transferred without paying an income tax, an estate tax, was $1.2 million. Today that allowable amount of transfer has ballooned up to over $24 million with the cost of living increases that have been put in. So that's an astounding increase in allowable transfers. And what that translates to is a very small fraction of 1% of households have an estate valuation of north of $25 million. And so a lot of seniors, a lot of people that bought policies for tax purposes, well, there's an example. I bought it for tax purposes. Now that purpose doesn't exist anymore because I don't have a taxable estate. There may be other reasons why they should keep it, but the point is that there are all these policies that are being lapsed without gaining any value for them. As you said, $57 billion worth a year. Imagine if all these people were able to get a pretty good amount of money for these policies. How much would that help them with their increased medical costs? How much would it help them just live the retirement that they want to live or fulfill their philanthropic goals, and be independent and self-sufficient instead of like letting that asset go to waste?
Now, let's talk about, for instance, auditing an insurance account. What are some of the first steps people should consider when they do that?
Well, as we discussed, I think the first step is to get an idea as to how the policy is performing. That's like auditing 101, and that goes back to asking for those illustrations again in a couple different flavors, like we talked about. Ask the carrier what happens if I keep paying the way it is, and what's the solution thing, and maybe a couple different scenarios. That's going to give the policy owner a very clear idea as to where they stand as to how that policy is performing. I think another big question comes up, and if people have had policies for a while, policies that were sold, say, more than 10 years ago or whatever, may not have a lot of the potential bells and whistles for the policy in terms of long-term care benefits or things of this nature. And this is just a growing problem for seniors, is that a pretty significant percentage of seniors are going to end up having a long-term care event. And these are extraordinarily expensive events. So that would be another item to audit as to whether the policy they have has an opportunity to have something like that included. So it's not just from a performance standpoint that you want to be auditing the policy, but also from a benefit standpoint. What are the benefits that it's providing today, and is there something out there that could even be more appropriate that would provide a broader range of benefits, assuming your health is good? I would like to share with you and share with your listeners we've come up with something which I think is very easy to use and pretty interesting, sort of like the Geico calculator. We created a link to a calculator where any of your listeners can go and they can fill in just some very basic policy information, and within a minute they will get an approximate value of what that policy is worth on the settlement market. And this is based on hundreds of cases that we've done, so it's based on real-life experience. And there are other companies that have these calculators out there, but we've checked, and ours has the highest values because we actually, unlike some of the other companies, we go to the entire market. So how do you get the best price as you create the most competition in terms of determining what the value of that policy could be?
Mm-hmm.
So if your listeners go to our website, it's Life Insurance DR, DR for doctor, lifeinsurancedr.com. They'll have access to that calculator, and it's a pretty handy tool for just, I had no idea that my policy was worth that.
Mm-hmm. Now, you talk about also cashing out, as I was stating earlier in the program, that, you have a large turnover rate of insurance agents that sell policies.
Right.
They don't tend to be compensated too much longer after the initial sell, so there's not much of an incentive to go back and kind of review and evaluate this. Let's go ahead and talk about that and what people can do in the meantime to be sure that this actually happens and they know where they stand.
Well, I think that them getting the right information is critical. So they need to contact an expert. I suppose they could call the company, but most everybody knows somebody that is a good life insurance agent. This is not an indictment on all agents. There's a lot of outstanding agents around the country, but it's more a awareness of the deficiencies within the system itself. Because of the large turnover of agents, sometimes these policies are what you call orphan policies. And so they're not always, paid attention to by the top people. And, everybody needs to get expert advice. So they really need to contact a website like ours, or contact a friend of a friend, or, talk to somebody that's going to give them good information as to what's going on with their policies, because I would say that the onus is on the policy owner, not because it should be, but just that's a reflection of the reality of today's business.
Wow, it's pretty amazing to think about things that are going on in this industry and how people have so few ideas about what they should do, what the next steps are. It's sort of like they just sort of buy it and forget it sort of a situation here. And then in the long run, as I had mentioned earlier in the program, the insurance company becomes a beneficiary. It kind of is the same way of saying, well, I bought in a gift card. It was astounding to realize how many gift cards go unused and lapse.
Right.
And how much money these stores that actually count on that happening gain from this. We're talking millions of dollars a year. It's pretty astounding to think about.
Hundreds of millions and billions. And that's part of the education process. That's why we're trying to get the message out there. I think that there are a lot more messages. There's a lot of TV advertising going on now for life settlements with various companies. A lot of website activity. So there really is, and I sense it because as I talk to other, people that are in the industry, wow, there's really like a lot of advertising, and there's a lot of this, and there's a lot of that, and it's partially a function of the whole baby boomer population. I'm a baby boomer, so we had this huge increase in births, And now all these people are, turning 65, 70, and older, and a lot of them have these policies, and they really need the help at this critical juncture of their lives. It's who would want to waste an asset that could be very valuable? And to benefit the insurance carriers? No, nobody's going to want to make them the beneficiary. So it's one of those things where people need to be proactive. I don't think they're going to get the help just, waiting for somebody to show up and say, hey, we're going to make sure that your policy is doing well, right? So I think it takes a lot of initiative, and hopefully shows like yours and all these various methods of making the public aware that there is value and don't let your policy lapse is going to help reduce the amount of wasted money that gets wasted because people aren't aware of what their choices are.
Now, is it true that at times people may have multiple policies, and in fact that maybe in some cases there are policies people simply just don't need?
Well, again, that's part of the review. So if I were reviewing a situation and somebody had 3, 4, or 5 policies, we would total up the things. We would look at the performance for each policy. We go back to the primary question that I suggested in the beginning. For what purpose was this purchased? And is that purpose still a valid purpose? Has it grown? Has it decreased? Is there a better way to consolidate these policies? It would really, there'd be 25 different things you would look at to make sure that you were trying to meet the current needs and the anticipated needs, because that's where we're at in time. They have these policies. These are potential assets, and so how can we best deploy these assets? How can we get the best performance out of each of these assets? So each case is a snowflake, so to speak, and each situation requires a full comprehension and understanding of what they have in the way of the policies and what their goals or their needs are.
Now, here's something I had as a scenario actually from a text messaged question from a listener out there. And they were hoping you might be able to help them out as they begin to invest money, for instance, and they get capital gains from, let's say, trading, for instance. It could be options or, let's say, Forex money trading, and to put that money somewhere where it's safe. Would an insurance policy, a life insurance policy, for instance, be a better option than, let's say, an IRA?
Well,
I know we kind of stretch beyond the realm here of what we're actually talking about, but I thought, what the heck,
Okay, I'm happy to try to address that. I think the first question is, if it were me and I had the capability of investing in an IRA on a pre-tax basis, I would probably not buy insurance. And I'm in the insurance business, but I would not buy the insurance unless I had sufficient funds and I had already maximized my pre-tax contribution. It's hard to compete with a pre-tax contribution where you're putting money in and you're getting actually a credit against your income, right? So the government is paying whatever your income tax rate, 20, 30, 40% of that money that you're putting into an investment in the IRA. That's assuming that your listener, has the ability to still fund their IRA, or they're starting to do that. Now, insurance can be a great ancillary product after you've already used up all your pre-tax money that you could invest, because while insurance does not offer the pre-tax investment aspect, insurance has two great components. One is that if you're going to overfund the policy, like we talked about earlier, that all your growth within the policy is tax-free growth. And hopefully your listeners know that or understand that, but when you buy an insurance policy and your cash grows in the policy, there's no tax on the growth. Secondly, again, with the caveat that you can't let that policy lapse, even if you reduce the policy and take money out, you do whatever we get involved with that also. We call them loan rescue programs. But you have the ability, like you alluded to earlier, that you can get money out of the policy tax-free via a loan or a distribution up to your basis. So insurance can be a good investment. I would say that probably as an investment, it would probably be, sort of in the minority reasons why people buy insurance, but it does have that capacity if it's handled properly.
It's just such a unique game, especially when you consider how it's actually being played against people who are customers, clients, people who are involved in this. I mean, the idea that carriers or broker-dealers will not allow agents, for instance, to be involved with life settlements, which is a way people can actually cash out. I know that you talk about it in your book, but they say the reason is because it's more profitable, obviously, to see policies lapse. And, again, when you see that nice, wonderful sort of family-indulged commercial, you're in good hands. We're your friends. Customer service, we care about you. Yeah, you certainly do. You care about making sure that we keep paying the premiums. You hope that we lapse on this so you can keep all the money we gave you in the first place. That's a heck of a stock option there.
Well, look, there was a movie about it. Look at Property and Casualty. The 3 Ds: delay, defer, and deny. I mean, it's like it's the basic. I got a claim. Well, you're not covered. So it's unfortunately, when you're dealing with corporate America, there's a lot of things that are not as moral as we would hope they would be. It's big business, and I think. There's a lot of honorable people again in the industry, and this is not a paintbrush, but there's been some serious discrepancies. I mean, did you know that there was close to a $6 billion settlement against life insurance carriers that were extremely timely and sharp on tracking deaths when it came time to paying out on annuities, right? Because if somebody buys an annuity, they get paid until they die. Well, so it's in the insurance carrier's strong self-interest to make sure they know the day that person dies, and they have ways of checking that through Social Security records and whatnot. Well, think about all the people that owned an annuity but also owned a life insurance policy. So on the one hand, the carrier knows there's been a death to the annuitant and the insured, and they certainly cut off the income stream for the annuitant, but they weren't letting the people know that there was a policy out there that they could collect that for the person who died. And it was a huge lawsuit, class action lawsuit. There was one round of settlements, and then there was another round of settlements. They had a show on it on 60 Minutes at one point. So it's you go back to people need to be self-protective, and if they know what they don't know, they have to reach out for some expert advice. It's not going to happen if they don't reach out.
Well, David, thank you for being on the program and enlightening our listeners with this. I know it's going to help a lot of people. Tell them about your book, what it is, where they can get it, a website where they can find out more information about your work.
Yeah, well, I think the best place to start would be at the website we talked about earlier called lifeinsurancedoctor.com, but it's lifeinsurancedr.com. And there's free downloads of several chapters on the books there. The book is available through Amazon. and there's access to really a lot of good information for people if they will visit that site about policy performance, about various trends in the industry. Like we talked about earlier, we have this instant calculator, which is very simple to operate, and within a minute will actually give people a number as to what we feel is a reasonable estimate of what the value of their policy may be. Certainly happy to field any phone calls. There's phone numbers there and emails. It's my passion to try to empower people, to try to help them, and to solve problems. And to me, this is just a problem of a huge magnitude when you consider the amount of money that's being wasted. And if you're a baby boomer as well, you were probably brought up with the same words that I used to hear at almost every meal. Don't waste your food. Don't waste things, right?
Right.
We were brought up not to waste things. It sort of makes me cringe when I think about the amount of money that's being wasted that could be really put to good use.
Absolutely. Well, David, I want to thank you for being on the program today. And again, go ahead and give out that website one more time.
Thank you. It's lifeinsurancedr.com. Lifeinsurancedr.com. Visit it, give us a call, send us an email, use the calculator, reach out. If I can't help you, and I know somebody local because I deal with people on a national basis all over, it's our passion and our goal to try to help people unlock, uncover, and get the value that they deserve and they should have.
Absolutely. David, thanks again so much for joining us here on the program today.
Thank you. My pleasure. Thank you.
We want to thank you, the listeners out there, for joining us. You can also discover more at beyond50radio.com. That is the number 50. We do encourage you to sign up for our weekly e-newsletter to keep up to date with what's going on in the world of Beyond 50 as well as our upcoming shows. I'm Daniel Davis. Thank you for joining us. This is the Beyond 50 radio program, and remember, live your day past halfway.